Ladies and gentlemen, good day and welcome to the EMMBI Industries Limited Q2 FY21 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinion, assumption, and expectation of future events. The company cannot guarantee that these are accurate or will be realized. The company's actual results, performance, or achievement could differ from those projected in any forward-looking statements. The company assumes no responsibility to publicly amend, modify, or revise any such statements on the basis of subsequent development, information, or events. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Parvati Rai from KR Choksey Research. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. On behalf of KR Choksey Research, we welcome you all for the Q2 FY21 earnings conference call of EMMBI Industries Limited. I take this opportunity to welcome the management represented by Mr. Makarand Appalwar, Chairman and Managing Director, Mrs. Rinku Appalwar, Executive Director and CFO, and Ms. Maithili Appalwar, CEO, Avana. We will begin the call with a brief overview by the management, followed by the Q&A session. I now hand over the conference to Mr. Makarand Appalwar for his opening remarks. Thank you, and over to you, sir.
Thanks, Parvati, for your kind introduction, and welcome all to EMMBI's Quarter 2 conference call. I'm very happy to meet you again, and I really appreciate your time for the company you have been again and again investing. So let me take you around what happened in past 3 months during the difficult time of COVID. So you can see that now the things are settling down, the dust is much less, and we are able to see slightly better with the clarity is coming. So quarter over quarter, if you see, considering the first quarter as a reference, second quarter of this financial year is almost 15% grown. It would have been much better because from the order side, the order book is much stronger, but especially when government started a drive to reach the migrant laborers home in the month of June. Especially for the month of July and August, we have lost around 650 odd workers for the temporary period. So at the end of, at the mid of around August 15th, we started a special campaign of Kam Pe Chalo, named as Kam Pe Chalo, and brought almost 600 people back from various parts of the country, that is from West Bengal or Bihar or Uttar Pradesh. And again, they are back to Silvassa. They are joined the company. All the people were brought, examined for COVID negativeness or COVID disease. Around 30 of them were found COVID positive. They were treated, and all of them are now in a healthy situation, and they all started working back. So I'm very happy to inform that as of 1st September, all the labor force is back, and company has started its operation to the fullest of its level, and the things are coming back to normalcy. So that's the plan, part of the COVID operational hazard what we had. So considering the overall situation, you should have seen that the profitability is little bit lower than our normal level of profitability. That is not having any other reason apart from the lack of the operational efficiency, as there were a lot of people were away. So the operational efficiency was down, and that is the reason why profitability is down. We are hoping that we would be near normal in the quarter 3 regarding our most of the performing or performance related parameters, when it comes to top line or bottom line or EPS or EBITDA level margins. Though I say less, still we could maintain an EBITDA level margin of around 11% during this particular margin during this quarter. Regarding the two major verticals, one is B2B. I explained you that the lack of operations has caused a little bit of a strain on dispatches, and that has reduced the top line. While it comes to B2C, you can see that this quarter was connected to the COVID moving to the rural area. So most of our B2C operation happens in rural, and the COVID, I would say, epicenters were most of the time shifting from the urban cities like Mumbai to, I think, 2-tier or 3-tier cities, or I would say a rural area. So there was a lot of challenges of moving people around and creating. So that is why Avana could not really grow in this particular quarter. So this is one of the unique quarters in the entire journey of Avana that it didn't grow as handsomely as it keep on growing on year on year. But there are a lot of other positives which came up in the vertical. One of them was introduction of basically Avana Smart Vertical. Maithili will take it in detail in her part of the presentation. And I'm also very happy to introduce you with one of our new team members when it comes to management team at EMMBI. Now the management team of 3 has been, top management team of 3 has been expanded with the 4th gentleman, Mr. Yash Punjabi. He is an ex-Microsoft, Google computer science engineer who has just returned from United States, and he has joined the company to take care of. EMMBI has various data-related things. As you are aware, EMMBI has been always a front runner in polymer processing and packaging and various other manufacturing-related research and development. Our technology side, or I would say data management side, was not equally supported till now. So we decided that expert in this field will definitely help us to create a new age or a new generation company. So that was the whole idea behind inviting Mr. Yash Punjabi to join the top management team, and he has agreed to do so. So he would be also giving a brief chat with you after Maithili's introduction. So he would be mainly taking care of the technology side, CRM, supply chain, and various other technology connected, I would say, domains of operations of EMMBI Industries as well as Avana. So he would be joining. He has already joined us and would be continuing to working with us in the coming time. Regarding various performance-related parameters, we have already given you the presentation, and I'm sure you would have had a chance to run through it, and we would be very glad to answer your questions after this presentation. So now with this brief details, I would like to hand over for the next presentation to Maithili.
Hi everyone, good afternoon and thank you for being on the call. So I will just go a little bit quickly over the Avana vertical for this quarter. Like we mentioned earlier on the call, the sales have been slightly subdued on the quarterly level, and that's because there was a very, very heavy downpour, which meant that our installation was virtually stopped for a month and a half, and we were not able to install as vigorously as we usually do. And that has a very direct impact on the sales. But now that the rain has kind of come down, we've seen the sales really pick up again in October and half of November. So we're not expecting that to have a long-term impact. That being said, we are happy to announce that on a city level, we are still the largest seller of pond liners in the country. So we have very quickly been able to establish a market leadership in this position, in this sector. However, we also wanted to make sure that this never really happens again, in the sense that we wanted to make sure that if there was such a heavy downpour, you might know that this year was the worst rain that India has seen in almost a decade. But if that situation were to be repeated, we don't want our business to be impacted on a quarterly level again. So in order to do that, we have started risk diversification, which means that we are very aggressively adding states of Punjab, Haryana, Telangana and Andhra Pradesh. And in addition, we are also aggressively adding new products. While doing so, we're also making sure that the peak times of sale of the new products which we are adding are different from the peak sale times of pond lining, so that they can balance each other out. I'm also happy to announce that with our retail division, which we had announced that we were doing Avana design, which would have products that would not be manufactured by us, but they would be contract manufactured and they would be designed and marketed by Avana. One of the products that we've been doing under that is Avana Kapila Murgas bags. And not only did we get completely stock out in our first sales season of April, May, and June, which is when the bags are sold, but we have now, for the second sales season, also started getting repeat sales. And our repeat sale percentage is over 95%, which is extremely high for a retail product, and which also means that our top line for a product like that will grow very robustly. So that is something that we are extremely excited about. Also, before I hand over to Yash, I just wanted to say that Avana is definitely a business where we're trying to veer away from manufacturing and move into distribution more and more. And for that, we need to invest as much as we have invested in the past in manufacturing. We need to make sure that we invest in distribution as well as in technology. So with this reason, we've decided to get Yash on board. And of course, there will be a lot of efforts that are made in order to make our technology and supply chain side stronger and have greater technology in our operations. But we are also entering the sales of technology-related hardware products. One of those is Avana Smart, which you might have seen in the presentation, but I'll just give you a very quick brief about it. Having worked with farmers for conserving water for such a long time, we've realized that farmers also want to invest in managing the water that we have. And one of the ways to do it is to automate the way their pumps are started and stopped. So our pump starter helps farmers use any phone, so not just smartphones, but any flip phone or anything that they have. And it works with any pump starters in the system so that farmers can start their pump, stop their pump, and decide for how long the water should be supplied to the field right from their phone. So they don't have to be physically present. And we are currently testing this product out in market. We've finished our very first round of tests, and we've just started setting into the retail market. So this is a product that we hope to get traction in, and we're hoping that from this product we'll be able to offer some more hardware-related solutions that are related to water conservation as well. So thank you so much. If you have any questions, of course, about Avana or the B2C business in general, I'm happy to answer, and I'll hand over to Yash just to introduce himself.
Hi. So as Makram sir and Maitri have mentioned, I'm Yash Punjabi. I recently joined Avana and EMMBI in general to handle operations. So something I'm passionate about is making processes more efficient, and something I'm proficient in is technology. So my overarching goal with EMMBI and with Avana is to take a look at all our processes and make sure they're as efficient as we can have them, and to make sure our company gets smarter over time. Something I believe in is that I'd rather have our employees free to work on creative things that need their thought and more of their bandwidth, and let computers automate and handle tedious work that they usually don't like doing anyway. So as you know, in Avana, we've been in business for 4 to 5 years, and we've amassed a lot of customer data in this time. So my focus to begin with is looking at Avana and to organize that data that we currently have to gain insights from it to help our expansion. And with our expansion, our expansion would also be easier if we have more robust systems for operations, including our manufacturing. So that's also something I'm looking into. Another vertical that I've been paying attention to is implementing a new CRM software for us to stay in touch with our current customers, help them with any problems, and gauge their customer experience. And we're also thinking about looking into new systems to collect data for retail products that we're starting off with. So having all of this data will help us with production and sales forecasting. It'll help us make better business decisions, and of course we'll be able to prioritize what products and sales areas we need to focus on to maximize our growth. So with this, I'll hand it back to Makrand Apalwar for his continued statements.
So I think we have given the information from the company side, so I would now open the floor for the questions and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Priyam Chera from Standard Chartered Securities. Please go ahead.
Hi, sir. I hope the NB team is well, fine, and all good, sir, on your side. Thank you for the opportunity and a good progress on quarter, I would say. So my first question is going back to a few of the data points that we had discussed in last quarter. I think, sir, would you like to highlight the recovery that you are witnessing? Is it that much lower than what earlier you envisaged, because you had given a guidance of that you would reach about 90% of the pre-COVID levels by this quarter, but it seems that we are yet at 75-80% kind of a range. So anything on that recovery that you would like to highlight us?
Yes, absolutely. When it comes to my previous statement, I was hoping that we would recover at least to the 90% level in even Q2, but which it didn't happen, which we only could recover up to 80% level. That is purely because of the loss of labor force. Because what happened was I wasn't expecting that almost 650 odd people would go away and not come back so soon. But because we were not expecting that the public transportation system would be so much delayed to rework. So ultimately it went to a level where we have to send the buses or arrange the buses from here, spending almost 50 plus lakh rupees, or I would say around 70 lakh rupees to get together people from all over the country. So that wasn't really a plan. The plan was we were expecting that by then the trains would start and people would start coming back. So that one aspect remained unexpected. But Priyam, good part is there is a very strong order book when it comes to exports. Now there is a decent order book when it comes to Havana. Of course, the order book is still a little subdued when it comes to the domestic packaging. So effectively, yes, to answer your question, I was not fully expecting this to happen. But when it happened, then we have to quickly change the course and start doing the efforts and bring back our people, which we were successful. We had a very tedious job to do that, because getting the 600 people back, getting them checked for COVID, after getting them checked for COVID, getting them all COVID positive or negative, then bringing them to factory and get them work. It was quite a hell of a job. Our human capital department did a great work, I would say. And then they all came back, and now from 1st September we are to the normalcy. So I'm quite hopeful that quarter 3 should be near normal.
Okay, so sir, what I understand is this is part of our operational problems that we faced led to a slower recovery. So can it be fairly assumed that Q3, Q4 can compensate the loss of revenues due to the operational part on our side?
I would not say that in totality that it would take care of the entire operational loss what happened in Q1 and Q2, because the loss is quite substantial. But I'm sure the gap will definitely narrow down. That will not close the year with 20% less. Even we work 10% high on both the quarters, still it would be 10% down for the whole year. So I can say that we are expecting the year to be plus or minus 5% of the previous thing, or I would say minus 5% to 7% of the previous year, but not as low as 20%. So there would be a pickup and then it would continue. So to answer your question, it will not that everything will be compensated, but a large part of it would be compensated.
Okay, that's great, sir. My second question is respect to utilization. So, like in the previous call, by the end of the last quarter, we were back to the pre-COVID levels kind of utilization. So, what's the utilization that we are running right now?
It is in around lower 80s percentage in the present situation. So we would continue or will improve the utilization factor by end of quarter 3, I would say. So we would be going back to a previous year level of around 86-87% by end of this quarter 3.
Okay. Yeah. So on the Havana side, so you did mention that we are getting good traction with respect to the new product launches in Havana and the various activities. So would you like to highlight the previous guidance of around 85-90 crores for the full year? can that be exceeded given the kind of development that we are witnessing quarter on quarter?
Yeah, I would say that we would like to revise our guidance downward, and it would not remain in exact the same level of 80 to 90 crore, but it would be anything between, I would say around 70 crore. It should be that's whatever the present guidance is. That it should be looking around 70 crores.
Okay. So, and anything on margin, sir? So, because of the loss of the top line, would you like to revise the guidance on margins for the next 6 months?
I would say that in the present situation, our EBITDA is in the level of around 11%. So, considering the whole year operation, we would be on and around 20% when it comes to EBITDA level margin, because we'll have to compensate at around 13-14% for this 2 quarters in order to get the whole plateau up. So year end would be 12% and around.
Sure. Thanks. I'll get back in the queue for other questions.
Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Vijay Soni from KR Choksi. Please go ahead.
Yeah, hello. Am I audible?
Yes.
Yeah, sure.
My question was, in the last quarter, you had talked about the online presence of and spending on advertisement and promotion. So keeping in mind it would be largely directed towards Avana, and as you have just downwardly revised the forward-looking estimates, so how are you looking at these activities, and if the spend is already been done, so how is the impact of that?
Yeah, I think I will give this to Maithili to explain you, because she is the most correct person to do that.
Yeah, hello. So first of all, to answer the question about whether the top line change would impact the marketing spend or impact our ability to make the marketing spend, all of our budgets are made on a lagging level. We don't do leading budgets. We do lagging budgets, which means that they are based on the revenues of the previous year. Since our division is not degrowing, Avana will still grow by about 10 to 15% on a year-on-year. So that should not be a problem. To continue to answer your question about us spending more on online as well as TV-related spending. So in terms of online, we have been spending a lot more on our social media. I don't know if you follow us, but we have a very good farmer following on social media. So our handles are Avana Agriculture. And over the last few months, we have been doing a lot of e-events under the name of Avana Chopal, where we call experts and have them answer farmer questions and just kind of, create a dialogue between them and the farmer and kind of helping our own brand promotion as well. In addition, we have also appointed a brand ambassador, and we will be signing an agreement. Since we have not signed the agreement, it's due to be signed next week. I cannot officially announce their name, but it is a popular regional Marathi as well as South Indian film actor. And the agreement will be signed in the next week, and we are expecting our TV commercial for pond lining to be out in December, and it will be running from December to February, which will help us capture our peak season sales of December to March for the pond lining sector. So that's kind of what's in the marketing pipeline, and if you have any other questions, I'm happy to take them.
Yeah, no, that's fine. Thanks.
All right, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Vinay Pai, an individual investor. Please go ahead.
Yeah, good evening, sir. Just one question. The main part of MB is the B2B business, which is about 76% of the total thing. So my question is how is the outlook like? I mean, this is the country facing any recession or anything that because I don't think the floods or anything will be related to the B2B portion, because so many companies are doing so well, and so B2B should not be affected. But in your opinion, how is it now? How does it look like now?
Well, I would say that countries, I don't know whether it's a recession or not, but definitely country has been slowed in the past 6 months, it was a much lesser operationally present in the past 6 months than especially the area under the review or the time under the review. It was slower. Later, from the end of September, it started picking up, and now for the month of October and November, it seems pretty, I would say, pretty much to the level, and that is, I agree to you in totality. But the sectors in which we operate when it comes to domestically, so if you see the reduction in the total sales which happen in various sectors, so most biggest I would say the dip has come in the domestic packaging sector. That was one of the sector which was hit to the highest level. So now it is becoming, it is again started recovering back starting from mid-September or early September. So it would be much stabilized because exports were not really severely hit, and right now they are going to be better. Avana kind of didn't got hit very severely, but still they were down compared to previous year about 8 to 10%. Similar cases with the exports, but domestic packaging was much more down than that. And as you rightly pointed out, that most of the larger companies or bigger companies have started doing well starting from September, which would be probably reflecting in our next quarter's results, because October and November, September end and October, November would mainly impact the coming quarter than the previous quarter. So I would say this recovery has been seen. Again, I would say I don't know country whether it is in recession or not, but it is slowed. For first 2 quarters, it has shown a slowdown process. It was substantially low. Operations were kind of down. So right now the things are coming back to normalcy. We expect that quarter 3 would be as strong as our previous year's quarter 3 or might be slightly better than that. That's what is our take on this.
Can you give us just couple of industries where this B2B packaging is involved? Cement bags and jute. I guess. Can you just give us some examples?
We are not in a big player in cement bags or something, but our larger player plays in FMCG, automobile. When it comes to domestic packaging, we are in big way in chemicals and food grain. So these are the major areas where we are having our play. So we were not very active into the cement side of it.
Okay. So all these industries, I guess, would be they are posting good results. I guess. So I mean, I'm finding out. So we should do well, I guess, in these.
I also feel the same that these industries have revived and they have started doing well in last 2-3 months. The reflection of which would be seen in the quarter 3 review.
Okay. Thank you, sir. That's what I want.
Thanks.
Thank you. The next question is from the line of Krishnan from EMMBI Industries. Please go ahead.
Yeah, hi. This is it's not a question. Since I'm a whole-time director, I just thought I'll answer Mr. Vinay Pai. Technically, Mr. Pai, we are in recession as of because if you had listened to the Deputy Governor's speech this morning, he did mention that the first quarter there was contraction was about 20%, and the subsequent quarter, which is what we're talking about, there was a contraction of close to about 9%. I don't have the exact numbers. So technically, yes, we were in recession because, I mean, as an economist, any downturn into subsequent quarters, you get into the term of recession and things like that. But as Makran pointed out, there's a gradual pickup. There is a gradual pickup. I'm seeing it because I sit on the boards of a few other companies. Yes, I'm seeing it. But, we need to be cautious about it. We need to be careful about it. We need to be judicious about it, and which is what we've been doing. And, I just wanted to clarify this. Is that fine, Makran? Do you wish to add something to it?
Absolutely. No, because I was not having the absolute numbers of the economy, whether it is in recession or it is in slowdown. So I did not comment on it. But if you have the numbers, I'm sure those must be the correct numbers. And I'm sure that was a great and thanks for this.
Right. Okay, thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Avnish Chandra from East India Securities. Please go ahead.
Thanks for taking my question. Good evening, Makran sir, Mathli and management team. Sir, my question is, last time we have guided for flattish year, and now you have explained very well that we will be end up with 5-10% down at the end of the year. But sir, my question is that even last time when we have our guidance, something went wrong. So from your expectation, what 2-3 things can go wrong from here, and we will not be able to even end up with 10%, maybe 20% decline on yearly basis. So just your thought on that.
I think, Avnishji, it is a very apt question and it's very interesting to answer because, this is the last 6 months, this is the one thing which I'm trying to do the best of my abilities to see the future of which way we are heading. So one thing which I'm right now worried is I have taken care of the order side, like order side is booked. We have taken good care from the supply side. The suppliers are tied up and everything is there. We brought back most of our employees which went as a migrant labor and they are also running. So there doesn't seem to have any problem when it comes to manufacturing side. The only thing which worries me is now second wave of probably COVID. What typically happened in Europe, that they recovered to a substantial level and then they suddenly had a second wave, or what we are seeing also in Delhi. Something like that, it goes on and again there is a kind of a nationwide panic or a disturbance which is happening and which breaks the manufacturing ability. That is the one thing which can now deter us from the, I would say, the target or the goal which we are seeing. If considering other things being equal, I think we would be able to reach the guidance what we have given.
Okay. So if there is no second wave of COVID, then we will able to meet. There is no any other factor which can go wrong.
As of now, I don't see any reason why we would not meet the guidance which has been given.
Okay. And so the other gentlemen were asking, I would again emphasize the same fact. I understand the recession point and everything. But one industry, if you look at all chemical companies, they are doing really well, and the chemical is anyway is one of the factors for our growth as well. So there, it seems some disconnect in our performance and our user industry's performance. So that we need.
Chandra sir, we have to see it this way, that any top line is either delivered by two sides. One is a sales side issue or one is a manufacturing or supply side issue. So as you rightly pointed out, there are companies which are doing well in certain pockets, like the companies which were based out of UP or others, which are, I would say that they are sitting on the gold mine of manpower or especially the blue collar manpower. They had a much quicker recovery than the companies which are situated on the coastal areas where most of the manpower is migrant. So those companies which are doing well are great, they are performed well, and they had a very good they were more automated processes, there were more companies with chemical throws which is situated where processes are not highly dependent on the human labor. While our situation was, we didn't had a shortage of orders. There were enough orders, there are enough order book, but there was shortage of the people who will comply to those orders. Because the migrant labor was gone, so I didn't have enough people to make the product which they were supposed to make. So larger side, I do agree to you that there were some companies which were doing good, but there are also then some companies, the large companies which are large petrochemical companies have shrunk 24% this quarter. So which I can't name it here, but you know what I'm talking about. So there is a both side of it, and the realistic thing is the economy as a whole. If you see a basket of companies, because I cannot point it out to only chemical sector or cement or say fertilizer or whatever. As a basket, our economy has shrunk. So by and large, companies will get impacted. And the good part is you have taken care of how to take care of this thing. I'm sure as a good shareholder, you would be happy that even after such a low operating happening, company has shown the positive top line. There is a positive side when it comes to profit. There is a positive side when it comes to cash flow. So all that we could maintain even at much subdued operating level. So when this operating level would normalize, give and take maximum 3 months. So company would be to its natural back shape. of performing into the excellence level. So that is what is my take. Though there are certain companies which were doing good, there are also certain companies which were challenged because of the migrant labor. We were one of them. So now as the people have come back, we have good order book, smart order book. We are almost booked for next 3.5 months. That is, I would say, half of even next quarter. So there should not be largely a problem coming to that.
Okay, that's really helpful. And one last question from my side. Are you facing any cost pressure on RM side, or that is benign or okay?
Genuinely, we are more of a pass-through mechanism when it comes to raw material. But raw material dipped down severely during the COVID period. Beginning of the COVID, it was really down because of the petrochemical complexes were not really. Now it is on the almost, I would say, level where it should have been. So there is no major pressure what we are seeing from supply as well as price when it comes to raw material. It is quite stable, and I'm hoping that coming few months, because there are some new facilities which have started in China, so that would ease out some pressure from the Saudi supplies when it goes to China. So China will play a role in Indian market, because that material is likely to be get diverted to India, and there should be some softening of raw material which we should see in the next probably 30 to 45 days. So to answer your question, there is no challenge when it comes to supply or pricing of a raw material.
Okay, sir. Best of luck for all coming quarters. Thank you
so much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is a follow-up from the line of Priyank Chheda from Standard Chartered Securities. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity again. So, sir, I'd like to ask, before coming to bookkeeping questions, I'd like to ask you, particularly to Makran sir. So, sir, what we are observing is in post-COVID world, there are few of the sectors, few of the industries that are benefiting. There are few sectors or industries which are definitely getting impacted. So, yeah, for MB, are there any green shoots visible in the long run, particularly for B2B business, be it specialty or advanced composites? Are we sensing some opportunity which would get us back to a very high growth trajectory and a new kind of opportunity evolving in post-COVID world?
Probably, I will not say only for B2B, but as a whole, as a company, it would definitely improve our standing in the market, because the one very simple thing that we were one of the least disturbed, or I would say least troubled company when it comes to supplies. We could still manage the supplies. So most of the customers are more confident and happy about how we perform during this difficult phase. And company has, in another way, I would say, learned to operate itself and carry its business with a very skeleton people. So the overall operational efficiencies have gone up. So let us look at it into the two ways, whether we just look the growth as a top line growth, or we look at the growth as a growth in profits, or growth in understanding, or growth in ability of company to take the most difficult situations further. So when it comes to growth in top line, yes, we would be able to bring back to our normalcy of around 15 to 20% in the coming next years, and that is all said and done. But at the same time, company has definitely grown in its stature by creating a situation where we provided uninterrupted supplies, whether it comes to our international clients or the domestic clients or the farmers. And we also learned a lot of new lessons. We created new systems. We even continued developing new products. You must have seen Avana Smart's launch the new automatic starter manager. So that is the thing that as company has really grown in a very good way, and that would definitely impact on the coming year's profitability as well as operational performances. So Ms. Regina, it's nice that you asked that what was the opportunities, challenges, threats we learned from this COVID world. So the one thing I would say that apart from our products, we also learned that there can be always a improvement in all our operational activities, which would ultimately end up into a better profitability as well as giving us a better growth trajectory in the coming time.
Okay, fair enough, sir. And sir, sorry to harp again on the sectors. If you can, it would be great if you can highlight few large sectors that are significant contributors to our B2B business.
B2B business, larger sectors are pharmaceutical, food grains, chemicals, petrochemicals, automobile.
Okay. Well,
and FMCG.
Sir, few of the bookkeeping questions. Any outlook on working capital days referring to your cash flow statement? We have paid huge chunk of creditors. So anything on the working capital days that you would like to highlight?
Right now it is well under control. There is no default. There are no things. So days would be coming down. So I have not exactly counted where we are, but at the end of the year, at least this year, our normal plan is to bring back every year by around 7 to 9 days. So I'm not very sure whether this year we will be able to bring that 9 days down. But I can promise you that we will not increase or grow on the number of days when it comes to this year's operations also. And overall, company's position when it comes to managing a working capital is good. All the customers are in a very good condition financially. No defaults or delays in any payments, whether domestic or international. So things look stable and positive.
So the creditors, would you like to call out something that we paid significantly during these last 6 months?
You want to say that as the creditor days got up?
No, the creditor days have gone down. We have paid a lot of creditors, right? So we have a negative cash flow of 8 crores in first half. So anything on that front that we prepaid few of the payments, something like that?
No, the COVID loans and other things we have already repaid. And just 1 minute.
Hello?
Yes, ma'am.
Yeah. Hi. If you see the borrowings and the creditors, it has if you see the positive and negatives of the borrowings and the creditors, it is plus minus the same.
No, ma'am, I was referring to the business creditors, not the financial creditors. I can get you. I'll get it done offline. All right. Sir,
Okay,
on the next question is the last question is on the capex. So we have spent around 4 crores in H1, and we have around 6 crores lying in the CWIP, and that's for last two.
That was for the last year. It will be completed by the end of December.
Okay, so we have some capex lined up because the earlier guidance was that we have no capex lined up for FY21, right?
No, we said that we will be doing a small capex, but this was already done in last year, so we have to complete that.
Okay, so we would be spending around 10 crores for the full year?
No new capex was announced, Priyank, but the projects were already on, which were already half-baked. Then those have to be completed. No? So whatever was a part of the working capital or capital expenditure in process, that has been just completed. So no new project has been opened. Okay.
So the capex guidance for the full year stands at around 10 crores. Can we expect to assume that?
It should not be more than that.
Okay, and just to clarify once again, so we have not prepaid any our borrowings. It's just that we have borrowed from working capital loans and prepaid term loans, right? Is that understanding correct?
We have not prepaid any term loans. No, we have not prepaid any term loans. We have just whatever was the regular routine repayment cycles, we continued that. Whatever extra given at the time of COVID as a COVID loan, one of them was taken and repaid. So that came within the quarter and got knocked off. Moratoriums are over, so there is no load of any such thing, and we are back to the normalcy. So at the end of the I think what you have seen is that this result, what you are analyzing today, is the result of a most difficult 6 months of probably last a decade. So now the things would keep on improving. That is what I suggest to investor community to understand.
Sure. Thank you.
Okay. Thanks, gentlemen. I would like to give back now to the call call holder. Would you like to take it back, please?
Sure, sir. Ladies and gentlemen, as there are no further questions, on behalf of MB Industries Limited and KR Choksey Research, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.